Mike here. Good. We're good. Mic test. All right. Welcome to a panel at ETH Denver 2024. We are here for DAOs are dead, are they? I'm Tertius from LexDAO. Welcome, happy to have you join us, and happy to have a nice panel here. Please, if you guys will, from me to the left, introduce yourselves and a little bit about your DAO history, and if the DAOs you're in are dead.
Howdy, I'm Hank Holliday. I'm the meta-founder of a collective called Quorum One. We're a member-owned and managed entrepreneurship collective. We incubate startups and do a lot of like service-based entrepreneurship in emerging technical areas. So Web3, blockchain, AI, lots of other spots. So we're very much not a DAO, but I used to say we're like a proto-DAO, but now I say we're more DAO adjacent, meaning that like I think we kind of operate with a lot of the principles of a DAO. I think by the purest definition of a DAO, we're definitely not one. But I am definitely an advocate for the broader definition, like the more expansive definition of DAO. And I think that the concepts behind DAOs, kind of software-mediated engagement, cooperative governance, and kind of like internet scale, I think those things have a lot of value to add far beyond kind of the Web3 space, the blockchain space. And so yeah, I guess that's, DAOs will never die, but also I think there's a lot more value for the spirit and technology and kind of principles behind DAOs to add value far beyond that space. So.
Hello. My name's Angelo Alicio. I'm one of the founders and kind of instigators of Build Republic. We're a global cooperative of startup cities. In DAO speak, I guess we're basically a DAO of DAOs because we are creating on-chain digital twins of cities, basically. So Build Denver is one of the DAOs. We have 58 cities on 6 continents. And if DAOs are dead, that's very much news to me. I think there's, for a long time I kind of view DAOs, even without the A, as kind of turbocharged cooperatives. And then now when you add in, unique structures like the LCA, which allows you to get risk capital into the cooperative, the A for AI, which is obviously extremely relevant right now, which can even, accelerate a lot of the objectives that DAOs and more broadly, I guess, cooperative philosophies are trying to achieve. So, yeah, DAOs are very much alive, very much moving fast, and really exciting.
I would agree with that 100%, and I guess that's why we're here. Yeah, I'm Zack Guzman, the founder of Trustless Media and Coinage Media. We are a mix of Kickstarter meets Patreon meets verifiable on-chain co-ownership for media entities that creators can co-own with their fans. So Coinage is one of the fastest growing Web3 media outlets, and to your point, I think it just used turbocharge. We're essentially a DAO co-op that turbocharges the network effects that come from a creator and their fans building together, breaking down the wall in Web3 media to build whatever you want to build in the media space. So that's Coinage, that's Trustless, and I'm stoked to be up here with you guys.
My name is Browne. I'm a tax advisor, partner at Darien Advisors. We do a lot of work with like navigating what is a DAO, and then what's the internal revenue source recognized. So I think we saw a lot of era of like people taking a hammer, seeing everything as nails, but we all have at the tax pro side, it's like partnership, corp, foundation, no more. So I'm excited to be here today and chat with you guys.
Yeah, well, thank you very much, and happy to have you here again. I guess my first question on are DAOs dead is really, are there DAOs that are out there that are in some zombie or proto form that are dying? I mean, if the question is really maybe over the bear, if we lived through the bear and some DAOs didn't, if there are DAOs that are in a zombie form, are they recoverable? Is it worth recovering them?
Well, I guess I don't know why DAOs get connotated with death. Like it's a kind of a strong connotation. In traditional startups, it's just like it failed, and that's totally okay. And we all know that startups fail, and that's what informs the information for whether it be the next startup or hey, this idea or market probably doesn't work. So, do DAOs fail? Yes, absolutely. Should they fail? Yes, absolutely. These are new primitives. It generates a ton of new insights about ways to build products which have never been done before. So the rate of experimentation is directly correlated to the frequency of death or more gently failure. And I think we can all, still learn from those, absolutely. So I think it's just because sometimes a token's attached to it that you can look at it at coin market cap and be like, oh, well, there's a price attached, so it's kind of a zombie. So, yeah.
I mean, to your point, Angelo, I mean, we see a lot of DAOs have specific purpose, like ventures, investment, communities, social advocacy. Like, those are having a higher probability of succession compared to, like, everything else just being a DAO. Like, your DEX doesn't need to be a DAO. It's a corp.
Yeah. I'll just add, too, also, because in startups, like, once a startup fails, like, the C Core shuts down. It's hard enough to just find that data on the C Core in general, even if it was alive, where, again, since everything's on a public blockchain, it's kind of, they all look a lot of zombies out there, yeah.
Right, in the detritus of DAOs on chain, you can find lots of lessons learned, I guess, would be a good takeaway. And we talk a lot about increasing the failure and iteration rate, understanding the good and bad parts of decay. But in that realm, as DAOs are now evolving, dying and coming up, and dying and coming up, what are the parts of the DAO space that you see evolving fastest now?
I think, for media at least, just the idea of aligning interests is kind of what is the constant piece of crypto to me. I think, Bitcoin was very good at aligning interests in finance and creating a currency for all of our community members. If you're in crypto, probably came in through Bitcoin. And, I think the elements that have worked well for all the DAOs that are really crushing it is just really nailing that aligned interest piece and figuring out the right way to make sure that you're building together in a way that the value capture is correct. And I feel like projects sometimes get that wrong because it's easy to overlook and just focus on, what excites us the most or what's the flashiest thing. But it's really the boring stuff. I feel like that is the key piece for DAOs that crush it. Constitution DAO is a good example of just like, I think a lot of people in the space saw that and it was goofy because it's like, hey, let's buy the Constitution. But it like showed you can raise funds, form a community like overnight and have everyone be on board with a creative idea. And, they didn't win the Constitution, but I think it showed a lot of people in the space what you can do if you align interests correctly.
Yeah, I chime in on that one too. I think the two big areas that I'm seeing a lot of progress in the DAO space is around governance and then investment. I think what DAO architects are doing with governance processes and with kind of software mediated collaborative governance is really, really impressive. And I think just this concept of taking, game theory and tokenomics and being able to like incorporate those into trust scores, measures of impact, measures of people's skills and understanding, and to incorporate all of those into kind of like a dynamic governance game. I think that's what for me is the most exciting because I see DAOs as really continuing the tradition of co-ops and trying to bring them into the modern age so that co-ops can outperform and outcompete economically traditional organizations. And I think one of the biggest areas of failures of traditional co-ops has been governance. It's oftentimes just, it's slow, it's bureaucratic. I mean, just saying the word co-op, it feels like sitting in an hour-long meeting talking about nothing, And so I think that governance aspect is something where DAOs really have something to bring. And then obviously on the other side is investment. I know in Quorum we're focused a lot about alternative structures of investment, alternatives to gov tokens, alternatives to equity, focused around kind of fractionalizing future revenue. But there's a lot of really cool things that we can do with how projects get funded. And I think in the beginning, a lot of DAOs seemed to me like just kind of copied and pasted the idea of stock in traditional equity corporations. It's like, oh, digital stock. And I think that's certainly one way to do it. But I'm seeing a lot of folks in this space kind of thinking outside of the box and rethinking what it means to raise investment in a network-centric way. So.
I want to echo that, by the way, because I think that's the coolest piece about what we're all doing. Like, that piece to me, there's plenty of ways you can securitize or tokenize and do everything and just have a thing trade and number go up, and that's cool. But I feel like what DAOs and co-ops are really good at is, again, aligning interest in the way that you drive network effects in the shared mission. Like, for us, as a media company in Coinage, we put out our first piece of content, did like 2 million views. It was the Terra collapse, the interview with Do Kwon, and it blew up, and we let people mint an NFT to watch it for free, but it basically let us find our community. They came to us, they minted a free NFT on ETH, and then from there we've slowly been raising the price because they basically let us build what we wanted to build as an outlet that had one piece of content. So at that point it's like starting as a Netflix when you have one piece of content, you can't really charge for that. But if you create a network and a community that was really into that piece of content and then you grow, we've seen the value of our community go up because now we have a larger audience. We can charge more for sponsorships, but you got to start somewhere. You got to find your audience, you got to find your community, and then you build with them. And I think that piece is lost in just, if you sold stock, it's not the same as finding a member who wants to contribute to the mission and make the mission better. Like, that's the network effect that makes DAOs and co-ops and communities, I think, really, really interesting.
Seconded. I mean, the value creation, we see what we do. Like, it's not just us, it's our clients, it's our vendors, all inflating our price and our value and what we can do. So a way to tokenize that reward mechanism, like if you give me a great lead, fantastic. You should share in the revenues, the growth of our firm and overall NERC. If you're building a new client, you save a client relationship with the staff, like you deserve interest in that because you succeed in essentially increasing the overall value.
I'm just going to kind of rapid fire because I feel like there's so many just incredible attributes. I mean, scale, right? Spork DAO. This is a DAO, right? This whole event. So if this is dead, that's surprising to me, but was $100 million in economic impact for the city of Denver. Anybody who's attended, you get the spork, you stake the spork. So just sheer scale, the ability to scale in an organization of this size quickly is pretty impressive. Accessibility to novel ways of, let's just take cash flows, for example, the ability to borrow against your assets permissionlessly to, maybe pay a vendor a little bit, or, however you got to optimize your cash flows, you can do it, I think, a lot more efficiently, cleanly, effectively, and I'd love, perhaps even easier way, or at least in a way that's kind of automated, all on chain. I don't even want to get into AI and how that adds to it now, but that's also impressive. We did back to the kind of the scale piece. We have we're a part of I'll add one more attribute is incentive alignment. So unlike kind of traditional, I look at the YC kind of model, and it's obviously a source of beacon of startup and inspiration and whatnot. But imagine if YC was structured in such a way where the relationship wasn't between the startup and YC, or at least the equity alignment wasn't between startup and YC, but also that was there, but then there was also shared across the entire startup portfolio. And so what that starts to do is unlock these really interesting incentive alignment, just first of all, just ways of thinking that like, oh, if we do a kind of a DAO token swap or treasury diversification with these 3 DAOs, those are going to compound network effects back to ours and theirs, and it's very, very much more positive sum, but it also takes a lot of unlearning and kind of relearning and appreciating these new ways of compounding value together. So that's like half my list. I could keep going, but I'm going to stop.
Yeah, I mean, very much. And, as I think of maybe taking the pulse of the DAO space, how it's doing, coming maybe out of the bear into the bull, as a service provider to DAOs, as a coordinator of DAOs, what do you see as really speeding up the rate at which it returns? Because in my experience, there's a lot of both experience from previous bulls and iterations. There's building through the bear, and there's a lot of tooling, and there's a lot of service now available. What parts of that are driving the speed of the increase of DAOs? Maybe Cameron, you want to start on service?
Yeah, I mean, for sure. I mean, it just gets easier. So the accounting, we only seen so many LPs, certain vaults, how you interact, certain transactions. So that has changed to a certain degree, but also the softwares have caught up. So when it comes to governance, when it comes to allocating your treasuries, when it comes to engaging with your cap table, all of these built in a Web3 fashion have been here, and they accelerate that innovation. So just continue on our normal pace of $100 million a day. Doesn't hit like $100 million 5 years ago, because there's so much more capability with that mill.
Yeah, in terms of tooling, I just feel like, this is my 30th Denver. It's been cool to see like the way that the crypto DAO space has evolved in just a short amount of time, right? You got to get everything built properly, and then you start to see the creative ways that people can use these tools and incentives and network effects, alignment, to actually create something that couldn't be done before. And, I'm just looking at things through a media lens, but like the ability to co-own assets as a community is kind of insane to think about. Like we built an amalgamation of my shitty New York City apartments and put it in the metaverse, and our community members can see that piece of content and then own that virtual asset together. And like, I don't know, that's something that could not have existed before Web3 came around. And, I think the tools now have made it so much easier to do things like that would have been impossible just literally like a year ago.
Yeah, and on that same note of things that could not have existed before, that applies, I feel like, to all the previous 3 industrial revolutions. We are now entering, if not already in, the 4th industrial revolution. But the major difference is that everybody can own a piece, right? You can go download MetaMask today and literally own a piece of this crazy tech frontier that we're entering. And from an ownership perspective, Web3 is enabling that, pretty significant paradigm shift, which is cool to think about.
I'm curious what you guys think, though. I interpreted kind of the underpinning sort of assertion of like this question: are DAOs dead? Right? Is the fact that we are a bit of a DAO winner, right? Like there was more DAOs, and then the DAO formation seemed to fall off a cliff, right? And so in my mind, that's a signal that tells us something. I mean, certainly there's a crypto winner in general. Maybe you think it's as simple as that, but what do you think it tells us, the fact that nobody's really starting DAOs right now?
I think it's cool because, I don't know, this space, crypto is filled with dreamers, imaginers, people who can talk a pretty good game, promise a lot of things. And it's almost like, I don't know, I'm excited to meet all the other Colorado co-ops, DAO co-ops, because we all are kind of in this to give real value back to the people who helped get us off the ground, right? And like, figuring out how to do that legally, how to do it right is cool, but then you got to do it, right? You got to give the dividends back to your members. You've got to figure out a way to who's active, who's inactive. You got to do all that. And I think we're like, Coinage at least, like we've been able to build, for a media company, it's not normal to get to that point to where you're in the green. But shout out to our team and our members for what we've been able to build, because we're almost there. And I think once people see like, okay, this is real, you can use an NFT to create membership, and you can join a DAO co-op, and you can start to make, I gotta be careful, our lawyers are here, you can start to win together. But I think it's gonna take actually doing it to where it starts to click for people, is like, oh wait, this actually lets me earn something that is real and not just speculate on number go up and then flip a token. It's like, no, we're building real value on chain. And I think once people see it, and it's not just us, everyone up here on stage, everyone at this conference, like once it happens, then we can say we did it. And then everyone knows it's not just hype, it's real.
Let's make dividends sexy.
I love the word dividend. It's like, why are we not using that more rather than just, okay, I bought something, I sold it, it's over, I'm done with this project. It's like, no, we are building together. And the dividend membership, it's like we're here for the long term.
I mean, you put in $1, get out $1.25. You have earned value.
Yeah.
I think that's the key word, building the thing, earning the value that gets conflated, and to take off the rose-colored glasses for DAO's, future. Liquidity can definitely be a curse and a bug, right? It's, I think is easy to see in the early ICO days. It was just like flood capital. Like if you compared that to, remember doing analysis, if you compared it to the average seed stage startup during the time, I think it was like something like 4 or 5x the amount of funding per progress versus more traditional startups. So there's still a lot of things to really learn from just the history of building companies and projects. Anything that has a token. I mean, even they're all still seed stage startups. They just have liquidity from day one. So sometimes it's actually better to intentionally maybe remove that barrier for a while and kind of because it can really pollute and pervert the projects, or at least the upfront willingness to build something of value. Even if you don't quite know what's out on the other side, you have to kind of build that faith, build that culture that, hey, what we're creating is valuable, and if we're right, then we can kind of have the rewards from that. But if we introduce this mechanism too early, then a lot of times they'll fall apart. So often that can kill projects, I think.
I mean, that also gets at this idea of conflating money with power, and which is not something that all DAOs do, but it's something that many do, and it seems like kind of the default way is essentially selling governance tokens, right? And so, which is the same as traditional equity corporations, of course. I think I really get inspired by DAOs, and I know this is like Quorum's approach as well, of separating money from power, so that just because you put a bunch of money in doesn't necessarily mean that you have any more say in the governance. It doesn't mean that you can't get involved, build trust, build a track record of success, build up key specialized knowledge that then grants you voice and authority in the governance process. Of course, you're encouraged to put in money and sort of build authority in the governance process, but those don't have to be one and the same. And DAOs give us the flexibility to be able to kind of define whatever the heck we want, right? And so if we can separate those two, it can change the incentivization structures that come around with like too much liquidity. It's like, well, is liquidity really a problem kind of writ large? Is it as much of a problem if all you have liquidity on is sort of trading shares of future revenue or trading shares of future benefit, but owning those doesn't necessarily give you any ability to kind of push the project in a certain direction?
Yeah, I mean, that leads into, if it's both the investment of time and the investment of money. I'm in DAOs that I've only invested time, and others I've invested money in. I think, it seems to me, my next question is that if you're looking at the investment space broadly, and retail investment is becoming gamified, obviously centralized exchanges are very aggressively gamifying investment, attention-seeking, attention-capturing. Sticking with the theme of "Are DAOs dead?" is how do you compete for attention? How do you gamify DAOs? How do you get participation without losing the soul of a DAO?
Yeah, I think dividend's a sexy word, but it's not something that a lot of people in this scene are excited by. It's sad because it's like, I don't know, I've always looked at it as like you're trying to sell a long-term vision to someone who's a crack addict. Like there's a lot of people who want to flip on the day. They want to be around maybe for like 30 minutes, 5 minutes is like how long they're thinking. And it's really hard, I think, to like sell a longer term vision in a space that is focused on like number go up or price or like flipping, because they get distracted by that. And so you do have to be careful. Otherwise, the DAO will be dead if you mix that up, because you want to share a roadmap and share a mission. But I think, There's nothing wrong with that. People, even if you're an investor in a normal thing, you want to see returns, you want to see progress, you want to see that what you were sold matches with what you're delivering. And you can get lost in that too if you get distracted and decentralized too much to where there is no guiding light. But I think it's on like any DAO founder or project leader to say, all right, I hear you, community, and I hear everyone in this community, and you got to get it right to where not one person can steer everything too much, because then you're perverting the whole thing. But I think it is important to, show people you're making progress. And if it's not number go up, you've got to deliver some sort of metric that shows, all right, we're growing, we're building this right.
Yeah, I don't think they're different. Like, right, like how do you stand out without losing your soul? How do you attract attention? I think for me, it's the same thing. I think, I'm biased, I guess, but I think the strongest DAOs are DAOs with a really strong sense of shared purpose and shared identity, right? With a clear mission, and the clarity of that shared identity. That is everything. I mean, that is, and so that then in turn creates a culture, which creates more shared identity, which deepens the culture, and ultimately, what we talk about at Quorum One a lot is work joy. This idea of like, what is it like for us to be in that place where the joy that we feel in our working lives is sparked and like exist in that place more often. And so I think if you could do that for people, it's infectious, it's viral, it's magnetic, and your members will help you stand out and kind of solves for everything else.
No, 100%. And it's something like, obviously good financial prudence leads to success. You save a penny, earn a penny, et cetera, right? But what you see when it comes to DAOs, it's culture. Like, I've also built 2 remote accountancy firms with my partner. What we have in common is an energy, a community, a familiarity. We ask like, hey, how was your last weekend? What'd you get up to? But to have that commonality with someone over the internet, it enables you to continue doing that remote asynchronous work. If you don't care, it's just, upside. Why am I going to participate?
I'd say the answer to avoid competing for attention is that you just don't. You don't compete for attention. You go back to the basics. I was talking about YEC earlier, but how things could be even cooler in this more DAO structure. But their tagline is still pretty simple. Build something people want. Build something for your customers. Find customers who are outside of these, sphere of where that competition for attention is, and you want to, make something people want, and then you Trojan horse and you DAO pill the people afterwards. Because if they're coming in for your product, whatever you're building, just out of either they either want it or they want to be a part of it, then the kind of mechanisms of a DAO only compound that value, because it's like, oh, cool, you're coming for what we're building for you, whether you're in crypto or whatever, we're making something of value for you. That's great. Oh, by the way, did you know that we're going to also stream dividends to you, literally in real time on chain? We have to you got to set up this thing, and it might be take a little learning curve, but that just compounds it immensely, and then you're really solidifying that relationship that much further. But if it's the other way around, then you will be stuck in that attention arena, basically.
Yeah, and maybe reframing in our DAO's Dead in considering DAOs as sometimes amorphous, multi-level, multivariable living organisms that are evolving. What do you do within a DAO or in a DAO you're a member of to really get the proper fuel going to certain areas to make parts of it evolve, but also maintain the structure, kind of the spine or the soul, as you were saying? What parts of that? How do you drive the energy and the flow that parts of the DAO need to suck up to both grow and to evolve?
We talked about this earlier. I think that's the secret sauce of any DAO is that a founder has a vision. If you start it, depends on kind of how DAOs or whatever gets spun up. But the ideas that come in through the community members is kind of the reinvigorating piece. And for us, just personally at Coinage, we've had ideas, right? So we're an outlet. We've had members pitch guests. We've had members book interviews that I would have never been able to get myself. And I think, the piece that makes it most exciting, like we had the co-founder of Netflix find about our project, and he's like, this is awesome. You guys are revolutionizing media. I don't understand what's going to happen with your model, but the idea of aligning interests and giving the value back to, your members is very exciting. And so, he's thrown ideas in too. And it's like, I would have never, like, building in the open just unlocks so many different possibilities. And I think that's the cool piece about Web3 and DAOs is that you just put an idea out there and you see who it attracts, and then you feed off of whatever their ideas are. And I think to the question of are DAOs dead, like, if you set it up right, it can't be dead because you've created a community that has their own ideas and own kind of creative thoughts, and they put them out there. And if you get governance right, the best one wins. And I think that can't die.
I'll just break it into three, I think. Kind of basically values, leadership, and like show, don't tell, right? Our moral code as people is something that we typically will act in our highest conviction about on things. And so when you express whatever your values are for your organization up front, this is what we did for Build. Build values is the first thing I wrote in our white paper. And I actually hadn't then, after we kind of, started doing the thing and getting busy building, I hadn't appreciated it enough, but we've actually had a lot of members come say, like, I actually joined and paid because of the values. So that was just kind of cool to see. And then leadership, remove the tech from all the equation. A lot of this stuff is just a leadership challenge, right? And since it is permissionless, you have to, tapping into that organic initiative that person has to want to express first. But at the end of the day, like, nothing continues to move forward without, those good leaders. And then show, don't tell. So, like, I think thinking, if you're founding a project or starting it, thinking of yourself from day one as like, oh, I'm a contributor to this thing that I'm putting above myself. So by just like literally doing the work. So, building all this thing yourself, doing all the things, there's no task too big. And then, this kind of goes hand in hand with the leadership piece. You'll start to see more folks kind of exemplify that same behavior, which I think just then starts to feed into the culture. So those are the three things we find the most important. Yeah.
Yeah, I agree with all the stuff y'all are bringing forward, of course. I think the piece I would add would be professional empowerment and professional growth. I think part of what any sort of collective structure has to offer that can sort of beat traditional orgs, and I think DAOs are only more so, and potentially exponentially more so on this front, is the ability to offer. And I'm kind of focused more on like work DAOs where people come together to do work together. So that's my bias, but at least within that realm, I think DAOs, when done right, can offer the quickest path to growing your career, to becoming more experienced as a professional and more powerful as a professional in a way that is non-transactional, in a way that is community-driven, in a way that is not holding you back like a traditional corporate structure, where all of your success seems very dependent on this sort of rigid structure. And so I think DAOs can really just lean into that and make sure if you can bring people in, help them identify and get clear on their own professional goals, and help them grow and learn by doing stuff that maybe they're not qualified to do, by getting and notching successes under their belt that they wouldn't have been able to notch on their own, or at least not as quickly. I mean, first of all, that's just freaking awesome. I mean, like that's great. You can feel really good about what you've done at the end of the day. But second of all, those people aren't going to be quiet, right? They're going to go bring in their friends and their colleagues, and I know that because that's exactly what we've seen. When you do right by people, when you help them grow their careers, they will do right by the collective, because why wouldn't they? So.
Absolutely. The next question I have is really based on if there are DAOs that are dead because maybe Gary Gensler had his way, or because state enforcement came along. Tornado Cash, not a DAO, but that's a way a DAO can, in theory, die. How do your communities and your DAOs feel about that, respond to that, talk about it amongst each other? Where does it drive you to move, either to run away and get ahead of that, stay away from Weagle, go off in Greyland, be more agile? What lessons do you take, and what does your community feel?
I think we're probably all going to have a very similar answer on this one, because I think it's probably the coolest piece about building DAOs and why Coinage and Trustless are trying to build, Colorado co-ops, is because it's legal. And we wanted to build in the U.S. And the idea of getting that right to where you can actually promise things that aren't new, right? Everyone knows REI. Everyone goes there. They understand, okay, I get a dividend at the end of the year. I'm contributing. Great. Like, that is an incredibly important and powerful shield in the world of crypto, where projects are shitting their pants every day for exactly that question of, could we, could Gary knock on the door and could this happen? And I think getting it right legally is very important in crypto. And doing that obviously lets you kind of remove one worry from the plate. So I think we're all pretty similar in the idea of, all right, getting these questions answered correctly. You operate in a bunch of different jurisdictions, so I don't know how you do it, because there's a lot going on. But I think getting that right from day one just, lets you build for the long term the right way.
Well, it's something that we see too, like partnership law, corporate law, tax law. These are things that have been trusted for the past 30, 40 years. So if you go, if not more, and the thing, if you form yourself a 501c3, a 501c4, alternative tax elections to achieve that social purpose, public good, you don't have to be saving cancer, et cetera. But like in the case of Uniswap is a 501c4 foundation. They have a social purpose decentralization. They are accredited by the IRS. They file 990s, but that exists onshore. And in the case of, other mechanisms, an LCA can be taxed as a partnership. It could be a cooperative here in Colorado. But you have existing 1120Cs and certain tax elections that are recognized, tested, approved, and as long as the narrative, the governance, the bylaws, how do you report to your stakeholders, if that aligns with the IRS is expecting, you're within the bounds of the law, which is fantastic.
Yeah. It's not the sexiest thing to say on a panel about DAOs and stuff, but it's like, I don't know, co-ops have been around for a very long time. And we talked to an accountant once, and he's like, oh, I get it. You're making the co-op a 21st century thing. And that's the way I think about DAOs. And it's like not sexy, but it's powerful.
Absolutely.
My legal representation is in the stands, so please wave your hands if I'm saying anything, but that's not the right way. But first of all, very much in alignment with what was just said right here. There's structures that allow you to do the things that DAOs promise. It's not lost on me that creating a DAO for each city might get interesting down the line. But at the same time, at the end of the day, we're also entrepreneurs, right? We're founders. The founder's job is to take a very surgical, precisional look at risk and calculating that accordingly, somewhere on the spectrum of playing it really safe and, just doing all the things. On all the way to the other end, look at Uber. I think it was kind of strategically in their plan, just get really aggressive, build up a pretty sizable legal fund, and then I'm not saying to do that. I don't think I have that kind of risk profile myself, but you can calculate a lot of these things, and also you can build products in a way where you don't have to have you can do a lot of kind of testnet tactics, right? Where you're doing things that aren't legally binding. They're not actually going to have, significant implications for the business or your legal standing until you see how things kind of play out, right? Like, okay, we're waiting for this regulation to pass here before we actually do this. So you can kind of, sometimes it pays to build patiently to see how the market plays out and evaluates and the regulations evolve. So those are the three things I kind of think about, yeah.
Yeah, I think the thing I can think to add is, I think a lot about ecosystem diversity, and I think there's a lot of work to do to pull more people into the DAO ecosystem. Certainly, contributors and folks like open to being a part of a DAO, entrepreneurs who would consider, getting involved in like creating such a novel structure, and particularly like, the friction, the amount of effort and learning it takes to sort of get over that hump, to wrap your head around this space, I think is a significant blocker. And then in particular, investors. I think, we've explored the investment space around some of these alternative structures. The reality is that there's just two different worlds, right? There's investors who consider investing in these types of organizations, and there's investors that are a hard pass. And it's like 95% of all investors are like a hard pass. And so I think there's a lot of work to do to iron out some of these gray areas, particularly around securities law, to give more confidence to people. And I think everybody understands that, we're all on the vanguard together, trying to push this forward. And in order for this sort of collectivist approach to entrepreneurship, to innovation, to really take root, we need to pull more people into this. And that's not going to happen while there's still a bunch of clouds hanging over, even like some of the fundamental underpinnings of these organizations.
Yeah, I get a little bit of a surprising theme here in this era of crypto. It seems like from OX DAO legal perspective, we were dealing so often with DAOs who were going down and then finding legal and then finding structure. But if you can drill down a little more on kind of what you've been saying, like how you use structure to drive narrative and drive community and define what actually you're building toward, it seems relatively new to me.
Yeah, I don't know. You want to go with structure? Because structure, no one probably knows it better than you do.
I was gonna say even just the continuity of a DAO, like certain cases, like a DAO for a specific purpose or time is okay. It doesn't need to exist in perpetuity. We don't need to have the same thing. It's like pizza DAO. Like all they do, they throw pizza parties. That's their purpose. They do it well. They execute. Everyone's happy. But there's certain DAOs that they have the initial euphoria. The vision gets clear, unclear. They don't know where the purpose is. They don't have the right economic model. They may be brought in council in 3 years later. And then they're sitting there in this weird amorphous organization that isn't yet dead or alive, but people still carry, but begrudgingly, sorry.
Yeah, there are certainly DAOs that lose their way. And there are ones where if you don't set up the structures we've already talked about, it can feel like homework to a lot of people. And no one wants that. No one likes homework. So structuring it and figuring that out is pretty important. But yeah, to your last question in terms of it sucks. Like I'll just say it sucks that we're like thinking about, like obviously there are scams. So it's good that like people are thinking about how to do this legally and how to set it up right. But we've heard from Hester Peirce, she was speaking here, like it sucks that there are entrepreneurs trying to do this legally and have to worry about, am I going to go to jail all the time? And that's not good for entrepreneurship, and I think it's bad for the country, but I understand why everyone wants to protect everybody. But at some point, it's kind of like, we need more good DAOs. We need more good projects that show what we're all working on. You can really start to unlock some of these effects, and I'm just excited that I think that's where we are now. There's more good than bad. There's more fun than homework, and that's exciting to me.
Yeah, on the structure front, one of our collaborators said this thing that has stuck in my head, which is that we've had centuries at this point to study the way that hierarchies work, that hierarchical organizations work. We have management science and org design theory that they're really with like these long track records and really great tools for studying and planning out hierarchical organization design. But decentralized human organizational structures are comparatively incredibly new, particularly ones operating at the kind of like speed and scale that we see DAOs doing. And so I think there's a missing science that is evolving right now, and we're all kind of figuring it out together. But I think Quorum's approach is to start from the humble place of, look, we don't know how to structure this. Like we've got ideas, And so, we're a company that grows and then grow other companies and then hosts other companies and tries to get them to spin out when it's appropriate. And so we look at each one of those companies, each one of those virtual companies as an opportunity to test out a new structure. And one of the things I'm looking forward to is like more DAOs, more people in this space sharing best practices, sharing more details about exactly what their organization model is. How do they handle money? Like what are their incentivization commission structures? Do they have an HR policy? Like all of those. How do they handle leadership? Right. All of those pieces I think are incredibly important and also incredibly different. So yeah, I think more collaboration amongst DAOs would be helpful on that front.
Yeah, well, I guess maybe largely take it that DAOs aren't dead. Maybe DAOs were hibernating for the winter a little bit. But I certainly get the impression that you were all building through the winter, as I was and many were. And I see a lot in the kind of building up different DAOs and cities model, a lot of green shoots of smaller DAOs starting up. Is that where the growth is now, or is it in actually taking DAOs that are generally around for a bit, been putting their structure together, now getting their tooling together, and streamlining? Or is the growth in just widespread, absolute seeding everywhere?
I think that's a good question, because have there been huge acquisitions in the DAO space yet? Like someone swooping in and just being like, I want to buy that up? Because
I don't think so, no.
Hasn't happened too much?
I mean, you see like various like venture investment DAOs that will invest or take ownership or control of like certain token stakes, but not the same kind of like SPAC, private equity group type of scooping up various DAOs.
I think most of them are probably because they haven't set up the structure right, so they wouldn't even know like what that looks like.
What am I buying, an LLC? Like,
yeah, what are we buying? But I think if now that we're in this chapter where people have set things up right, what that looks like, I think it's really interesting. Is like, okay, and we've seen it with some NFT projects. Like someone swoops in, Pudgy Penguin's a good example, and they see value and they want to unlock it, so they swoop in and run it. I do think it is kind of interesting to think about what happens in the next 5 years when potentially some of these DAOs could get scooped up like that.
I mean, like, I find this more often than not now. We have, like, Technos, Redwood, they're doing a token valuation, they're assigning value. Before, it was like, yeah, you just want a 10% stake? Sweet, deal. So it's people a little more businessy.
Yeah.
More adult.
I think we definitely need more M&A activity kind of in the space, for sure. We need really good examples of successful mergers, of successful acquisitions. But I also think there's a broad space for alternatives to traditional M&A that are only possible because of DAOs. One of our members and partners, awesome guy, David Thompson, he has a group called Covalence that is doing a lot of work around kind of shared IP ownership, or like creating kind of semi-merged kind of partnerships that allow benefits in different parts of these partnership networks to for the economic benefits of those to propagate through a network in a way that, again, would just not be possible in a traditional organization. So,
no, I think we'll see a lot of M&A activity, consolidation, but also decentralization. Like, why does the Uniswap Foundation have control over their grant-making program, their benefits, as well as the overall DEX and DEX code? Like, those should be multiple organizations within one through some sort of shared governance mechanism, but they're fundamentally different activities. But each DAO holder has the same vote in what's the percent fee on this LP, and also do we fund these builders to ETH Denver? Very, very disproportionate things.
Well, I think that's just about wrapping us up. Any final thoughts? Any quick words? We've just got a couple minutes left.
Yeah, real quick, I would just say Coinage Media is where we live, coinage.media. If you want to co-own a Web3 outlet with us, it's exciting. Co-founder of Netflix and everyone else. And shout out to our community for making us what we are.
If you want to get bored of taxation, come check us out at Darien Advisors.
Build cities. So if you want to talk about startup societies, startup cities, network states, DAOs, buildcities.network. Check us out. Twitter at buildcities. And yeah, this is great. Thank you.
Yeah, hey, if you want to do some consulting in and around the AI blockchain space, or start a startup with some other fun folks in a supportive atmosphere, come check out Quorum One.
And I guess I'll say if you have legal questions, LexDAO is around. We're available. We are very public facing, so anytime you come in, happy to point anybody anywhere you go. All very good.
Awesome.
Yep.
Thank you.
Thanks, guys.
Thanks.